Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jason Cahill of McCune Capital. Jason, thank you for joining us.
Thanks for having me on.
Great. Can you talk a little bit about your background before you got into early stage investing and what led you to start investing in the early stage?
Yeah. So my background, I am a Army veteran. I spent my 7 years of active duty kind of split between 9/11. I was in from 97 to 2004. So the reason I go back that far is really I'd sort of say thematically as an investor, I look at inefficient markets, but really inefficiency has sort of followed me throughout my career. In the military, it was inefficient people, getting humans to be more efficient, more effective, motivation, and sort of workforce management. I got out of that in 2004 and became a consultant in and around the DC metro area. And I'd say the inefficiency there was more policy and process. Left that in 2012, went back, got an MBA, started a company, sold the company, and have been investing since. And that's really more about inefficient technologies. So if I use the word efficiency or inefficiency too often, just slap me, I suppose.
That seems to be an investment thesis, and we'll like to get into that here briefly or shortly. But for those who are early stage investors just starting out, what's your advice for people who are just now doing that based on your experience?
Yeah, I think having gone to numerous events, both fundraising as a VC as well as sort of networking events, for sure, there are a lot of early stage investment vehicles these days. So I think being very deliberate about what you invest in and why you invest in that, I think is important. There are some really smart generalists. There are some really good generalists, but I think if it's 2018 and you're getting into the game, I think you really need to have a sort of angle. You have to, just like if I'm looking at a startup and they say, hey, we're going to attack the ride-hail space. Well, immediately my brain says, why are you not like, what makes you different than Uber and Lyft and others? So similarly, I think LPs really want to know what makes you different and special.
So you advocate getting very narrow but very deep in a sector and understanding all about it, all the players and all the careabouts, as opposed to going broad and doing the portfolio thing where I have one AI company, one fintech, one CPG, and et cetera to kind of cover all the bases.
I think if you're an early stage investor, so if you are going to be writing $100 million checks at the pre-IPO or growth equity, maybe then it makes sense to have a really sharp staff that can go deep in diligence. I think at the early onset, the challenge is there's just not enough data to sort of, air quotes, pick winners. There's so much data that shows what the sort of failure rates look like among early stage startups. So if you go really early and just say, I'm going to pick this AI company and this fintech company, maybe you get lucky and you go 2 for 2, but I don't generally see that. So I think, again, if you've got amazing deal flow because there's a peer early stage VC in New York who he worked at a couple larger, more established funds early in his career. So he's done pretty well as a generalist because he's also been doing it a good bit longer. So he sees things that others may not. Whereas I see deal flow in the specific sectors that I invest in that others would never.
I see. So going back to that introduction about your background and what led you to where you are, efficiency seemed to come up a lot. And I see that the industries you're involved with are around infrastructure, transportation, energy, and ag tech. And it seems like you're taking an efficiency approach to those areas, but maybe you can tell us more about the sectors you invest in and the angle you're taking on it.
Sure. So I would say that at the intersection of new technology and older industries is really the sweet space we play. So the industries you just mentioned with a sort of robotics, AI, ML type focus. And really what I would say is, generally speaking, what I've found over time is newer innovations tend to go to finance, fashion, entertainment. So fashion and entertainment is more on the sort of consumer end and finance is more on the business end. But if you're thinking of a brand new machine learning platform, maybe that plays out in some fintech world. If you're looking at a brand new VR platform, maybe that plays out in the entertainment space. So what I'm looking for is as these sort of newer technologies become version 2.0, what are these sleepy giants that can get truly disrupted, such a cliche phrase, but literally the world sort of tips over on its side and you walk through a shipping terminal or a trucking warehouse and you see their world change forever for the better. Where I think a lot of the fintech world, no offense to anybody who's in that, but it seems like it's very mature. So it would be hard for me as an early stage investor to sort of, again, diligence one versus another, because they might say, well, this is our algorithm that beats others' algorithms. And it seems like there's not as much, from my vantage point, not as much blue ocean opportunity there.
So where do you see the big blue ocean coming from in all of those sectors? Tomorrow's infrastructure is a pretty broad space. Where do you think the winners are going to come from?
Sure. Yeah. So I think, look, in the last 18 months, I think that there has been perhaps a political shift in this country. And so I look within those sectors. If we sort of said, okay, Obama and a Democratic administration supports X and Trump and a Republican administration supports Y, I want to pick platforms where it doesn't matter. And I think, again, with that inefficient market, so one of the companies I invested in that's actually in your backyard, and so they are able to, I'll paraphrase real quickly, they are able to remove a waste stream from incineration and put it into reuse. And I thought, okay, is this some hippie thing that's going to work in Austin and Portland, but does this work in like a Salt Lake City, in a Boise, in a Houston? And so what I sort of stumbled upon was really economic opportunities are not red and blue, they're just green. So when you talk about what are the opportunities I see that, again, as budgets gets compressed, as we move forward through time and we're looking at bottom line type opportunities, is there a play to be made for waste to value, where I'm a large industrial and I throw away, for example, 100,000 gallons of paint? Is there an opportunity to convert that to a value stream? If I'm a oil producer and right now I'm just flaring off methane, is there a way I can kind of convert that, capture that? And so I look at the technologies that are able to sort of, I guess, drive economic opportunities through sort of channeling inefficiencies, reducing inefficiencies.
It certainly seems like there's a lot of those opportunities out there, especially if you look at the broader stream of products that are going into the recycle and the waste stream. It seems like there's plenty of opportunity. Are there any particular applications that get you excited the most?
Well, the ones I've all invested in are the ones I get excited about the most. No, I think that in particular, there are probably three topics that I'll spend the most time when I'm sort of looking at the next 6 months. So one is in the waste space, where I would say that is using more industrial sensors. So one of the companies I invested in got a shout out. Well, the company that they support got a shout out in the Wall Street Journal for really sort of driving innovation. And I think industrial sensors and industrial IoT platforms within that waste space, I think the market's matured enough to where you look at these sort of unsexy, big behemoth industries, the waste managements of the world that on one side, and then you have oil and gas where you got an old dog well where Bob, the tanker driver, drives out every Tuesday to just sort of throw a dipstick down in it and see what the tank says, looking at sort of industrial IoT as a sort of service layer that sort of adds value to a lot of those industrial components. That's one. And then the other is really, I would say, distributed energy systems. So I haven't pulled the trigger yet, but I've been looking a lot at sort of community solar systems. So I live in New York City, and guess 99.39's worth of the population simply can't have rooftop solar because we live in an apartment. So looking at sort of atypical solutions to that problem. So these large energy producers certainly want to have grid stabilized power, but they're also aware that with the price collapsing in various sectors, how do they sort of keep steady revenues? So looking at community solar, blockchain solar, ways to sort of take advantage of newer appetites and interests in alternative energies, but in a technologically smart fashion.
I notice about all these areas is that they tend to be worldwide, not just to a region or a country, but everywhere you could use it. And I guess to your point, they're all politically agnostic at some
Mhm.
level. Maybe how you fund them would be different, but use of them would be the same and so forth. So is that your core investment thesis, is find the commonalities that go worldwide and are politically agnostic, and those are the ones that you think will be there for the long haul?
Yeah, I guess I'd never thought deliberately about the worldwide application. I've definitely thought about staying away from any kind of regulatory environment. I've gone to a couple of fundraising events recently where it seems like cryptocurrency and cannabis coming up a lot. And it seems like with both of those topics, simply the stroke of a pen could eliminate a whole lot of value. There could be an executive order that says, I hereby outlaw all cannabis. And then it would be a little awkward for me to go back to my LPs and sort of shrug my shoulders. So certainly on the political spectrum, I want to stay right down the middle of the fairway, nothing too sort of hot button. And yeah, all else being equal, I'd much rather be a billion-dollar company with 0.01% of a very large market than really sort of duking it out to get to 15% of a much smaller market. So all of my companies are US based, and none of them have deliberate, probably 12-month visions of going overseas. But yeah, all of them certainly could play overseas, and it wouldn't be off the radar, if you will.
So for the startups that are listening, what is your specific criteria that you want to see in a startup, revenue, sector, stage, et cetera, before you'll seriously engage with them, just so they know who's a good fit and who's not?
Sure. So there's really no revenue target. I would say within the active portfolio, I think maybe one or two of them had revenue at the first sort of outset of the conversation. But I would say definitely I'm a thesis-driven investor. So all the topics I invest on are on the website, and I'll say them again. If you're at that intersection of old and new, so old industries would be energy, agriculture, supply chain, transportation, industry 4.0, if you will. And that 4.0 is the artificial intelligence, the machine learning, the robotics components. So the sort of first pass filter I would usually say is problem, solution, market, team. What problem are you solving? Do I care about it? Is it within my thesis? Solution is at the first conversation, at sort of a first filter, that's kind of binary. Either you've got a solution that is novel and interesting and defensible and unique, or it's just sort of an also ran. The market, is it very large? What change in the market enables this disruption? What stays the same in the market to sustain your growth? But like a lot of early stage investors, I'm really going to dig in on team. What makes you the special snowflake that's going to kind of really knock this out of the park? How are you sort of mission built to solve this particular problem? So yeah, I think I've gotten this question before, and I'm always nervous I would much rather, this will sound cynical, but it's much easier to say no to somebody than it is to never get the email in the first place. So I don't want people to be afraid to shoot me an email or reach out. So clearly, if you're doing like regulated healthcare stuff or cannabis on the blockchain, and save the time. But if you're doing something that even feels remotely on the edge, drop a line and we'll take it from there.
If you had to characterize the challenges that your startups in this space face, what would you say are the number one or two things that they have to overcome? It's not regulatory, but it might be other elements that come with the space of working in these areas of infrastructure, clean energy, et cetera?
Sure. So probably thematically, one of the most common ones would be growth of sales, if you will. If you sort of think of market sale, B2B sales as a bell curve, getting those early customers, and there's all sorts of crossing the chasm type references and things where early sales, you can convince your friends and families and a couple tech adopters to come on. But just because something works in New York and SF doesn't mean it scales to Austin, to Boston, to Minneapolis. So I think one of the common themes where I try to dig in, roll up sleeves, and add value where I can is, who are your next three customers? How are you going to approach them? What's the unique selling proposition? All of them have unique product challenges, but I would say on the enterprise side, in these older industries, and part of that is really trust. These are generally older industries. They've been doing, inertia took over 20 years ago. So figuring out how to disrupt that takes more time. So you need a sort of earlier, more patient investor.
Well, a few moments ago, you talked about your favorite opportunities were the ones you've actually invested in. Can you describe a couple of the opportunities you have invested in, what they do and how they're doing it, and what you like about them?
Yeah. So Smarter Sorting is in Austin. They're the hardest to pitch in 15 seconds. Essentially, they have a machine learning and computer vision type hardware device that is able to detect usable waste. And the particular stream of waste is called household hazardous waste. So that's caulk, bleach, paint, ant killer, things that are too toxic to be thrown in landfill. They actually incinerate. And they're able to, using their hardware and software platform, as things are being sort of shuffled around, they would say a brand new bottle of bleach weighs a gallon is 8 pounds, and an empty bottle is 4 ounces of plastic. So this is 4.5 pounds. So I know that there's a usable amount. So it gets diverted from incineration into reuse. So when I first met them, I think they were in like 3 municipalities and had no commercial foothold. And now they're in like 20 municipalities. And I think they're in 4 different commercial. H-E-B is the local grocery store they're in, and they're also in Canadian Tire and a good number of other commercial facilities. Because you can imagine a forklift operator pokes a hole in a can of paint, it spills everywhere. You and I aren't going to walk into a Home Depot or a Lowe's and buy some sticky, icky can of paint, but all of their secondary market buyers who need 1,200 gallons to paint a bridge, all they need is flat weight paint. They don't really care how it comes. And so they've created a really interesting opportunity playing in that space. Another one, completely different, is machine learning platform in the trucking space. So they have a 25-year data set looking at the risk profile of, they were sort of born out of a trucking company. So everything from accidents and incidents related to traffic, weather, type of truck, time of day. So they built this model now so that they can model out, if I'm a truck dispatcher and I have 5 drivers at my disposal, I can kind of say, well, it's this time of day with these weather conditions, Bob is my best driver. Oh, it's the weather deteriorated, now I should send Sally. So they've got some great customers that, yes, they're insured, and yes, they will get paid if things get damaged, but the supply chain disruption is a lot more problematic than simply the dollars and cents. So they've got a couple of pharmaceutical supplier companies, for example, where if they get $1 million, that's fine. But if they have a week-long supply chain disruption, that to them is worth a lot more than just the payout. So they've been doing really well in that space. And then I guess one more, Andium. So Andium was a bit further down the road when we first talked, but I just kind of fell in love and couldn't say no. They are an industrial IoT sensor company focused right now within the oil and gas space. So as I was mentioning, all around in Texas and other parts of the country, you've got that 80-year-old dog well that's just sort of got no technology on it. It's just sitting out there. So once a week, you got a driver who goes out to the site, takes a reading by just literally putting a wooden dipstick down in the well. And then depending on various conditions and scenarios, he might drain that tank into a truck and offload it or various other operations. It's a highly inefficient process because he's not going out there based on what's actually been pumped because there's no technology. He's just going out there because it's Tuesday. So these inline sensors that they built are able to detect down to the microliters what's going on. They've got pressure sensors. They built a whole platform of sort of industrial sensors, and their first vertical has been oil and gas. And they have some really awesome marquee customers that were profiled in Wall Street Journal because of the sort of, again, that word efficiency, the efficiency gains that they have been able to have. They've been able to outpump all of their competitors within the space just by sort of being smarter about the way they employ their resources.
So in all these cases, you have an efficiency play, but working on traditional products or materials or what have you. So I assume there's a tremendous dollar savings that come from these as well, given the scale and scope of what you're working with.
Exactly. Which I think, generally speaking, if it's a pure SaaS model, the metrics you look at is, your CAC and LTV, your customer acquisition costs and your lifetime value. So when you start talking about cost avoidance and cost savings, at some point your CAC goes about as close to zero as it can, because you get this virality where it becomes a competitive advantage that one client has that the others don't. And once the cat's out of the bag, you have this inbound flux of customer desire.
Well, in the last few minutes we have here today, what else should we cover that we haven't?
Boy, I don't know. I guess so. I'm trying to pick up my brain in reverse, because we talked about kind of the fund and why I pick what I do. No, I don't know.
If we covered it, that's great. And
Yeah.
How best for the audience to get back in touch with you?
Sure. So website's probably the best way. Got my email on there. There's also like a contact form. So if you just want to direct inject whatever you're working on, you can just put it on the form.
That's great. We'll put that in the show notes and invite people to get back in touch with you that way. Appreciate your taking time. Love to have you back for a follow-up in the next few months to see how some of these startups are doing and how your investment thesis is growing and maturing. So with that, appreciate your taking time.
Yeah, thanks for having me on again. Thanks.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.